Good evening, everyone. This video is going to be a trading review and support session for June the 7th, 2023. And I introduced one new trading change today from a stop management perspective. So I'll talk about that a little bit. But let's first start with sort of what was ended up being a down day today. But let's kind of look at the daily. So you can see that we did end up down. It wasn't quite that far down when we started. It was another no news kind of a day today, except the Bank of Canada, as we saw this morning, they actually raised their rates by a quarter point, whereas it was forecast to stay flat. So London had opened and sent it to the Globex low, and market opened about there, right? So it actually opened around yesterday's high, and since it actually went up, our first few trades were to the long side, and then from that point it kind of gradually drifted down. So this was 7 o'clock time frame when the Bank of Canada raised their rates, but typically Bank of Canada is kind of like a don't care for the U.S. economy, but and I'm not sure that that's what did it. It's just that I think the market has been a little overheated, so it's still kind of in this kind of a little sideways kind of action. So if we call this the low, oops, I need yellow. Call that the lowish, and that's kind of like the highs, right? So we're in, it's about a 30-point range, right? And we're close to the bottom of this 30-point range, right? And so we'll see which way it's going to go. Like we know that next week is going to be at the FOMC next Wednesday, a week from now. We'll get the results of what the U.S. is going to do. It seems as though the majority of economists are saying they'll pause, but Bank of Canada just gave us a little bit of a surprise. Not that they may be done raising rates, but at least maybe a June pause and then a July increase. Not a big. I mean, if this is not Fed's talking, this is just a poll of economists. Some probability of an increase in July. So, not a done deal by any stretch of the imagination. Never can necessarily predict the Feds. The Feds haven't really signaled too much about a pause, but we'll see that next week. So, like I said, opening up a little bit strong. Here's mid R1, right? And yesterday's high is right there, right? So I took a first trade here, and was out there. Took another trade here, and was out there. And took a third trade here, and was out there. So 3 trades, within the first 5 minutes or so. And then came back around. This one was a little bit, it's kind of going with the trend, and it would have been just fine. I took a trade here, but I just got out for 2 ticks. Was kind of not sure if it was going to go back or not. It did. So I just took 2 ticks on that trade. And let's see. Then I kind of calmed down a little bit. Took another one here. Right, this one might have been a better one. I'm always a little cautious around these pivot areas, because sometimes that's when it rolls over. But I took a trade here, and then again out 2 ticks. So I got took it a few times today. I know I took another one for 3 ticks, a little bit, 2 or 3 ticks later. So here's one that was so fast I didn't even chance to say anything. So I was taking a short here, and about the time I was about to open my mouth, that the whole market dropped and got out very fast on that one. And then short here again. There's another 2 tick trade. This is like 4 trades that I took less than 4 ticks on. I guess I took 3 for 2 ticks. I know there's one coming up at some point for 3 ticks. So that one would have worked. So far they all would have worked for more than 2 ticks. And then I took this one. This is a little bit about after the Bank of Canada announcement, and I was kind of thinking, well, so maybe they are thinking that something is going to go on with the U.S. So I took this again as a little break out of this R1 area where they had worked previously. There really wasn't much, any volume going on, and so that one didn't work. I was thinking about maybe, getting out of the trade, but then I waited too long, and so it stopped out. So here's a good area to go over again what my stop strategy is. So I'm initially throwing a 4-point stop, right? And my intention was, when I kind of doing a lot of research, is that the stop is going to be around the 3-minute low. And in this case, right, I was long, so the stop is going to be around the 3-minute low. But that was a little bit excessive. So so if it's less than 4 points, I'll probably just have to make up my mind what I'm going to do on a trade by trade basis. But a 4-point stop is not a bad stop to use. It's relatively easy to recover, which I did today. So at this particular point, before this trade, I was up. I think I was up about 5.5. All right, so I gave up 4 points on this trade, so I was still up, but not by much. And then it started, kind of kept going. So I decided to play a little catch up, especially since it's starting to break down, under the 3-minute moving average, and again VWAP. So I took a trade, and then I took another trade, right? So I actually had 2 units going in here, and was out down in there. So I recovered not all of the loss, but I certainly recovered some. And then I took a trade here again, right? Rejection from the EMA, kind of took it a little bit late probably. So there was 1 unit. I ended up adding another one to it, somewhere around here, I think. It's hard to see white on white. And then got out down here. Net results of a one point, but 2 units to get 1 point. So I'm let's see, where would I it's hard to keep track of exactly where I'm at, but I'm probably up again in the neighborhood of about 5 or so at this point. And then here's the next trade here, short and out. And then another trade for 2 ticks. Weird. I don't remember this many 2-tick trades, but I guess it is what it is. So short here, and then out for 2 ticks. And then I knew this was the one I knew that was coming up. So short here, didn't want to challenge the 2x20, 2x200 too much. So I took 3 ticks. And of course it went down and would have delivered even more. So let's see. So I'm probably completely back to, if not more, than what my original profit was at this particular point. And then no, I'm actually more, because here comes my last trade. Short here and out, last trade around 7:30ish, 7:34. So my last trade of the morning, and did not trade anymore. last trade, so up 7.5 points gross, which is okay. I mean, that from if I hadn't have chased that trade around news time, right? I mean, even if it was a Canada-based news, and it didn't really have any volume associated with it, right? It was a little bit after the hour change, so I could have been more conservative there, and I would have been, you know, maybe I just would have stopped earlier, you know, because it's already in that time frame. It's already up 5.5, so maybe I could have been up more efficient in the same range, and/or you know, this is a pretty good trade. Just kept on adding to profits. So that's the new stop strategy, especially in these slow kind of markets, as I was talking about this morning, where if you kind of get on the wrong side, and it's kind of going slowly and slowly against you, and maybe you add to it to help you get out, but it just keeps on slowing and creeping, and your losses start to accumulate, which is what happened yesterday. So I'm just going to cut it off. So you know, if it's a slow, creepy kind of day, a 4-point stop is going to just have to work, because we get, you know, if we're patient, even on these relatively low volume days, we get enough trading opportunities to be able to have a reasonable day, and I think that's always, unless it's a really bad kind of a morning, and if I have a 4-point stop, right, it's not going to have enough room to add much to it, right? I mean, today, for instance, I added a second one, right, and got out a little bit early, even though I could have gotten out more. So if you only got a 4-point stop, it's really not going to go that far against you. Can't go that far against you to in order to kind of like manage that trade. And I like that aspect as well. You just, you know, if you're going to stick with the high discipline and just stick with the 4-point stop, you can't hurt yourself that much on any one trade. So we'll just try to be a little bit more consistent like that, and I like that. So first thing in the morning, right, we've been getting some pushes, so that kind of gets us a little bit of a bias, you know, a little bit of a profit bias. Hopefully that continues. And then if we get a stop out, we don't have that much far to go to either get it back or get some more profits, and or have a low profit kind of a day, but you know, we're not in trades forever, right? So that's the thinking, and I like that. So it felt pretty good today, and so you know, because the indicators are fairly well dialed in. They're fairly well dialed in. So if we just obey the indicators and don't give us too much room to make a mistake around the indicators, which kind of did that yesterday, then we should be good. We should be fairly consistent without any bad days, and we maybe have some really good days. All right, so that's the thinking as of today. I'm still working on a little bit of something I only want to get the most important things of the chart, so I'm working on that a little bit. So as I get further along in that, I'll talk about it in the morning and on Wednesday nights as well. All right, any questions? Well, it's kind of a, you know, to go long or to go short, we still want a good entry signal, right? We still want a good entry signal. If the 3MA, meaning the 3-minute moving average, is green, it means overall the market is above the 3-minute moving average, right? So it's a little to the upside, right? The recent trends are a little bit to the upside. So we should be looking for a good long signal, right? And the opposite if the 3MA is red, right? So ideally, we would want the 3MA and the slow flex to be the same color, right? The text to be the same color, right? Because that, if we're doing that, we're really on the correct side of the market, and we're looking for a good entry signal. You know, in other words, something kind of close to the EMA with some volume. Now, and I have done this. So, for instance, if we got a pretty good looking entry signal that is aligned with the flexes, ultra flex and short and slow flex, and the EMA, and there's a pretty big separation between the EMA and the 1 minute moving average, for instance, right, on a counter trend kind of basis. So in that case, let's say we're going to go long, and we're above, you know, we're getting good signals, we're getting volume around the EMA, we're above ultraflex, we're above slow flex has changed, and we've got enough room to get into and out of the trade before it hits the minute average, the 1 minute average, not the 3MA, the 1 minute average, right? That's a little bit of a counter trend trade, right? But if you really like the signal, you can take that. And my suggestion is to take that one time, right? Because we're going counter trend, right? So the market needs to like prove itself a little bit. So let it get past, if it continues to go in the long direction, let it get past the minute average, and then maybe pull back and see if it's really changing directions. And at that point, sometimes you're kind of close to the 3 minute moving average anyway. So does that make sense? So really trying to go with not only the short-term trend, but the long-term trend. Going with if the short-term and the long-term is lining up, those are the ones that go for a lot, right? Those, like for instance, I mean this one, right? So here's the minute average, and the 3 minute is way up here, right? And the ultra flex is down, the slow flex is down. I mean, and when it starts to break with volume, I mean, it really goes. Let's go back to that one I took a couple on. Well, same thing here, right? It's under everything, and it really goes. Like for instance here, right? It's yeah, the slow flex is kind of turning up. Ultra flex is there. Got some expansion here, but it's kind of like right into the 3 minute moving average and the minute average, right? And it doesn't really go over anywhere, right? And then it goes sideways for some time. So this is a lower probability. So you're really waiting for these things, right? You can sit there in front of your computer all day long. You really would kind of like wait for those things, and you're golden. You know these type of things are certainly less probable, right? Certainly less probable. Now I wanted to go back to the one that I kind of doubled up on. This one, right? So again, here, right, when it's really starting to shift, here's the 3MA right here, right? And the minute average, you know, it's faster because the market was up for a while, and it didn't, even though this one didn't work, I kind of pushed this one, right? Because really, this is a little bit after the news, right? There's the 7 o'clock news, and there wasn't any volume. I was kind of going on candle reaction, right? And it didn't work. But when it didn't work and came down and stopped me out, then it was really getting angry, right? So here's the minute average, here's the 2x20 even, there's the 3 minute moving average. Now the 5 minute is down here, right? So could it have held? It could have, but look, this thing is really rolling over now, right? The market's really rolling over. It doesn't roll over forever, so that's why I doubled up here, right? So some of it was a little bit of revenge trading since I had just stopped out for 4 points, so I got, half of it back. So, so going counter trend, going against the 3MA, you better really like it, and you need to have some separation between your entry point and the next, like minute average or something like that. And ideally, right, I mean, for instance, like here, right, it didn't really go anywhere. Ideally, you'd want, if you're going to go counter trend, for instance, you'd like to have some buying here, right? Had a big bar, no buying. Let's see. I don't really remember one too much today. We're going to get kind of back to the open here pretty soon. All right, so here's buying at the open. All right, pushed it back up. Let me see if there's one today. That would be an example of. Well, I mean, this one we're talking about kind of started it, right? Because we're above things now and had some selling from the top. Let's go see if I can find something else. I mean, here's some selling again from the top. Let's see, where's the, oh, and there's 3 minutes. So we're kind of around these areas, right? Kind of going sideways, and one expansion, and then it broke down. Here's one, but it doesn't, I mean, here's some buying from the bottom, right? And it does push through, but it never really gave us a very good looking, it was like into a whole bunch of junk, right? So that one would not have looked very good. Let me see if I can find something else that would have worked, that looked like a good counter trend trade. Well, here's a little something. I'm not saying this is great because it didn't ever give a great buying signal. Right, so here coming down again, right? So buying here, continuation buying, but this is a crossing pattern, so you don't want to buy that yet. You'll want to come out and buying again here. Now, if it had pushed in here anywhere, it did not, right? Then maybe it would have been okay. So it did go up a little bit further, right? But it wasn't, in my opinion, ever looked very good because you didn't get any expansions in there. And here's the 3 minute moving average way up there. So this buying down here kind of sets up a reasonable, one shot counter trend kind of a trade, and to see if the market's going to continue to go up, but they never really came after it. So that one, they failed to impress me, I guess, in other words, right? Let's see if anything happened anytime else. Not too much. I mean, it ended up being, I mean, today as the afternoon went on, right, it ended up being more of a down day. Don't really see anything too impressive in around here from a counter trend perspective. It has to be a long, right, because we're underneath the 3 minute moving average, so it would have to be a long that would impress me. Okay, so let's talk about this one. And this one ended up being not necessarily a counter trend, but let's talk about it. All right, so here we are, back to the previous Globex low, right? The Alsatian low is down here. All right, so we've got a high volume, then an expansion. Now those aren't entry signals. There's just we're just observing, right? Comes up to the minute average, the 2x20, and the EMA. No expansions, but at least we're getting volume, right? Makes it above the, kind of hangs above the EMA, right? We get above and we're above the minute average. The minute average is there. We're above the 3 minute moving average, and we're there. So it kind of breaks out, right? Right. So this is the breakout. And then in this scenario, what we want it to do, and it does many times, right? They fade the breakout, meaning it breaks out and it pulls back to something, right? In this case, and many times it's the case. It just kind of depends. It's either the EMA or the minute average, depending on how fast the market is going, right? And then so they come back, and then here's the expansion, right? And it not only is expansion, but it's breaking out of the 3-minute high. So then the market is now trying to change direction some, right? So this trade would have worked, right? Pushing it a little bit. This trade would have worked. So you see what I'm saying there? But I'm gonna move the chart over a little bit, but you see what I'm saying there in terms of reading the market some and the big picture on when it's turning around. Okay, let me just go see if there's anything else. And the market, it's definitely got limitations. So it's back down. Well, let's talk about this one some. So this one, so it makes it past the 5-minute moving average, close to the 2x20, right? And then they really start nailing it from a volume perspective. So again, now this one would be, the 3MA would be green here, right? But then it's starting to, but it's coming down, and it's coming down with volume, right? So here's your one shot, right? It's either here or here, right? Your one shot at a short, and then the market is following through. So now it's all red. Now they're both red. So now you're going with the shorter term and the longer term is lined up. So now you're free to take another short, right? Here's another one, right? This is a good one because right now they're all clustered together here, right? And they're thinking about what they're going to do, and they start nailing it again with volume. All right, so yeah, good question. That's how we use that 3MA, and really kind of in context of is short term lining up with long term, and if it's not, my suggestion is if you really like it, right, you can take one in that direction until everything lines up again. Again, we only need a few trades a day. I mean, 5-6 points a day consistently is good stuff. All right. Anything else, Sean? All right. Thanks. You have a good night too. Good questions. It actually even woke me up a little bit. So. All right. Have a good evening, rest of your evening, and we'll see you again soon.